All right, Coinbase time. You ready?
Yeah, let's take a look at Coinbase and see what we see.
Let's do it. This should be a fun one. All right. This is a little hard to read here. We'll zoom in a little.
All right. So again, listeners, what we're doing is pulling up just the press releases. We're going to the investor relations website of the companies, pulling up their press releases and just going through it. And again, we're just doing it for the first time. We're just looking through it to see what we see and see what jumps out at us. And one thing that jumps out to me there, Joe, is Coinbase's verified users.
There's a lot jumping out here to me.
56 million verified users. That's up by 13 million additional users just quarter over quarter. In Q1 2020, 34 million. So 34 million to 56 million verified users.
That's amazing.
Look at
monthly
the
transacting
volume.
Users, trading volume, everything here is just off the charts.
You tell our listeners what those numbers are, Joe.
Yeah, so monthly transacting users, this is just from the previous quarter to this quarter. So Q4 2020, monthly transacting users, I assume that means users who have made a trade in the past month, went from 2.8 million to 6.1 million. Trading volume in billions of dollars went from 89 to 335.
This is quarter over quarter, people.
Yes. And assets on platform went from 90 billion to 223 billion. I'm just going to keep reading these off because they're pretty amazing. Net revenue goes from 497 million to 1,597,000,000. Total revenue went from 585 million to 1.8 billion. Net income went from 177 million to 771 million.
And again,
that's a reverse of itself. Yes, this is quarter over quarter. This is not year over year, folks. And then adjusted EBITDA went from 288 million to 1.117 billion.
Wow.
That's
all right. So more users, more transactions, more assets on the platform, lots more revenue, tons of leverage, operating leverage here. The net income jumped year over year, 32 million.
My gosh.
To 771 million. So there's not a lot of costs associated with each additional transaction on the part of Coinbase.
Right.
Is kind of the takeaway there.
One of the things that I find really interesting is that the trading volume is over 100 billion higher than the assets on the platform, which is to say that the people who are these monthly transacting users are like really, really active. They're making several trades a month.
Yeah, I also wonder too, though, Joe, if that's telling us that other people are using Coinbase for the transactions, but they have vaults that are custodying the assets somewhere else.
That I don't know.
Rather than holding it at Coinbase, you've got the trading volume, but you've got a number of people who have their own vaults and they're shifting those coins off of Coinbase. They're just using it as their broker to trade. So either way, interesting.
Yeah. All right. We'll keep going down here. So, oh my gosh. Retail trading volume, or really both of them, but
yeah, but I'm more interested in that institutional volume, Joe.
Yeah.
Because one of the big knocks on Coinbase has been, it's getting all of its revenue from, transaction fees on retail investors.
What happens? See here, that's not true.
It certainly seems like, right. Certainly seems like institutional is definitely becoming a bigger piece of the pie, at least by trading volume.
Yeah, so it's for those of you who are listening, the institutional trading volume is about 2/3 of the overall trading volume. So that went from 57 billion in Q4 of 2020 to 215 billion in Q1 of 21. And retail trading volume went from 32 billion to 120 billion. Again, this is quarter over quarter. I just want to make that abundantly clear.
Right. And it looks like, reading a little further here, it looks like 60% of all the volume was either Bitcoin or Ethereum. Remember, Coinbase does not trade Dogecoin yet. I did see some things on Twitter that would make me think that maybe they're considering it. I think the rumor was something like 4 to 6 weeks. I mean, Gemini, one of their big competitors that's not publicly traded yet, is allowing Dogecoin. What's interesting here, Joe, too, I mean, still we've got all this trading volume, and I mean, selling is trading volume too, right? But this week we did have a pretty sharp sell-off across the board in Bitcoin, Ethereum, Litecoin, Dogecoin, you name it, when Elon Musk, the Doge father, came out and said, you know what? I know we said a couple months ago we're going to start allowing you to pay for Teslas with Bitcoin, but we're not going to do that anymore because, you know, we're afraid of how much, or we don't like how much energy is consumed in creating Bitcoin and validating transactions and all that jazz. So everything swooned. I mean, you had people just pressing the sell button left and right. The things were down 20, 30% in the span of a few hours. Then we did see, I mean, this is what you can't, is your conviction your own conviction or is it borrowed conviction, right? And, you know, so you got a whole bunch of people who sold, and then sure enough, day or two later, you got him coming out again saying, oh, by the way, you know, we're working with Dogecoin developers to see if that could be a new transaction medium because it uses less energy. So it may just be that, you know, this is the normal seesawing of it, but it will be interesting to see over time what happens with transaction volumes. You know, I mean, if people lose a lot of money and they get wiped out in crypto, obviously transaction volumes is going to fall, right? And with it, revenue and all that profitability we saw.
Right. Yeah. I don't know if this volume spike is sustainable. If we're looking at this at their Q4 report, I almost get the feeling that it's gonna look like a spike if we were to graph it out. But I mean, there are still experts across the board saying that Bitcoin's going to get to 6 figures this summer, which obviously implies heavy volume. So I don't know at this point. I'm just kind of saying it's hard telling, not knowing.
Exactly. I mean, you can't, it's almost like this is a true price discovery trade, right? It's whatever the trend happens to be. But you just, listeners, you know, I do a crypto experiment. I did not sell anything at all this week on that news from Elon Musk. Okay, so just getting back here, I just want to have that little tangent there because you have to consider what trading volumes may look like going forward because that's how they make a lot of their money.
Right.
So, and look at the next chart, the next table they have there, assets on the platform. So that's a huge jump in institutional assets on the platform.
Yeah. Yeah.
And my assumption that any revenue off of that, though, is less for institutions than retailers per user. So it's less valuable to the bottom line, probably. But still, institutional dollars are more sticky than retail dollars historically for brokerages. So it's good to see that.
Yeah. And then the next part of this chart just breaks down the percentage of assets on the platform. So overwhelmingly Bitcoin, as you'd expect, 62%, but that's actually down from 70% in Q4 of 2020. And then other crypto assets went from 13% in Q4 2020 to 21% in this quarter.
It seems like it bounces around a lot.
It does. Yeah. 15, 18, 23, 13, 21
Yeah,
for those of you
maybe that
listening.
has to do with, whenever they release a new coin, or whether or not the stock cryptos are running or not, or Bitcoin's running or not. Or
Yeah, and there have been some crypto fads too. Like Ripple was one that
mm-hmm.
kind of came and went. There's this other one, Cardano coin, that I don't know if you've heard of that one.
Yep.
It's an interesting one that kind of comes and goes in a bit of a trend cycle, and some other ones too. Bitcoin Cash you could throw in there as well. So we'll just keep cruising down this shareholder letter.
So
So
this is
now we're
what I
getting
was
into
talking
their,
about, Joe, with that institutional accounting for because of course you got to give a deal to the institutions relative to retail, and now you're seeing that in the transaction revenue in that table you're seeing for net revenue.
yep.
So a lot more assets, but look at the lot less money being generated by them.
Yeah, that's a huge discrepancy. But I think that, like, it's still, you still can't overlook the importance of having institutions on there, because in my opinion, it gives some more validity to the platform, rather than just having a bunch of meme lords trading Dogecoin and posting about their memes on social media. To actually have some financial institutions on the platform, trading, holding, and not leaving, most importantly, it definitely it makes it more legitimate, in my
And
opinion.
Joe, I've seen a number of different companies of money managers are now saying, "Hey, I'm creating an LP, or we're investigating setting up an LP, version or for crypto." And so my assumption is that we were going to see more of that, not less of that.
Yeah, I agree.
And then, but it's also interesting too. I mean, the transaction revenue again, we talked about that being a big knock, how reliant they are on the retail transaction volume. So I mean, think of their total revenue was what, 1.8, or what was it? So yeah, 1.8 billion for the first quarter, of which 1.45 billion of that was retail, right?
Yep.
But then you say, okay, well, can they make money on other stuff? And my argument is probably yes. We haven't even seen
Yeah,
that.
so they have this subscription and services revenue, which was only 56 million in the most recent quarter.
But look where it was a year ago.
Yeah, it was at 7.1 million a year ago.
So definitely seeing some pretty tremendous growth there, even though it's still a very small sliver
Yeah.
of their overall revenue pie.
All right, Todd, I'm just going to keep scrolling through here. Stop me if something catches your eye.
Yeah, just keep going.
Yep.
I think operating expenses be interesting. Q1 813 million. Transaction expenses were largest. Yeah, 49 million percent of revenue, but they fell. Well, no, they have 15%. 15% of revenue went to transaction expenses, which really isn't that much.
No, it's not.
12% went to technology and development. Only 7% went to sales and marketing, which is interesting. 8% to general administrative. I love seeing general and administrative fall as a percentage of revenue.
And that plummeted 20% in Q4 of 2020, and now it's 8%.
Just as an aside with any company, listeners, I don't care if sales and marketing stays constant or even increases alongside revenue, because you're going to make, you're get out there and get the name out there to take advantage of the opportunity. But that general administrative, now you're talking about fixed expenses, kind of. It's the people who are doing the back office work within the organization, right? If you can grow that much at a much slower rate, then you've got tons of operating profit margin optionality,
Right.
in my view. So going from 33% of revenue to 8% of revenue, a lot of that obviously being driven by the huge jump in revenue. That's, to me, that's still pretty good sign. I like
Todd,
that.
what's your take on this technology and development, which I assume is their way of saying R&D, that expense is really going down quite a lot.
Yeah, I think that, I mean, you have to invest obviously in innovation, but the amount that you invest in innovation, I mean, that's honestly, Joe, it's on a dollar terms amount. They look how much they spent.
Yeah. So as a
184 million. So
listeners,
really,
as a raw number, it's gone from 90 million in Q4 to 184 million in Q1. But when I see that going from 18% of net revenue down to 12%,
it's perfect. I like it, Joe.
you like it?
I like
It
it. This is why,
makes me a
again,
little nervous.
but they doubled their spending on
Yeah.
on innovation, technology and development. They doubled it. So, I mean, at some point, as you're growing very rapidly like this, you're going to see that happen. You can, so they basically, Joe, is the best of both worlds, in my view. They're still plowing tons of money, way more than they were a year ago, 47 million to 184 million, into making the infrastructure better. But because revenue has grown so much more dramatically, it's a smaller percent. So personally, I don't have a problem with it.
Pretty impressive too that they only have 1,700 full-time employees.
Yeah. Yep.
For a company at least of their market cap, that's pretty much unheard of.
Yeah. Let me pull up now just to see how did those numbers compare
Sure, I'll
to what
stop my
people were
share.
looking for. And I'm just gonna go really quickly and look at Seeking Alpha. Interesting enough, on a gap, they missed on both.
Wow.
Not by a lot, kind of a rounding error on the top line, 1.8 billion versus they wanted 20 million more than that. The gap EPS was 305 per share. They say that was a miss of 23 cents. I'm just reading this off of Seeking Alpha, assuming this is right. But so yeah, I mean, expectations, Joe, we're just really, really ratcheted high because it was no mystery that cryptos were something that was hot, that a lot of people were excited to be taking part in.
Yeah, I think for all intents and purposes, it's safe to say that they met those expectations. I mean, yeah, technically they were a couple $1 million off, but in the grand scheme of things, I was pretty impressed with that report. And certainly, I mean, obviously I have Coinbase on a watch list, but it's gonna go on a close watch list starting next week. So it'll be interesting to see what it does.
Well, I think, Joe, this might be a good time to swap to the smattering and me talk about some of my buys and sells, because I added to my Coinbase position this week, and like a dope, complete rookie mistake. Oh my God, how long have I been at this? I didn't realize when I bought on that they were reporting.
Oh, that is a rookie
right
mistake,
in front
Todd.
of the report, which is just such a dumb move.
Didn't I just publish the short too? Why not to buy a stock before earnings?
Right?
Come on, Todd.
I mean, complete rookie mistake. So it just goes to show you that we all make them, listeners, and it's okay. So why don't I pull up my screen? And like I said, I had already had a position in it. So I really just was averaging down on it. And you can see that we're down about 3% today. We had that crazy launch. We talked about that. We talked about it holding the 250 reference price last week, rallying back up and then trading down and then almost touching that 250 reference again. So that's why I added a little bit more there. Typically speaking, IPOs usually undercut, I think 80% within the first 9 months of trading. So you can be patient when it comes to IPOs. Another one that I completely bumbled and I added to this week was Bumble. BMBL. You see how, you traded down from the IPO launch. You broke that support. I was hoping it would hold it. And then you just nosedived. You're up 4% today. So my buy yesterday on that big steep drop working out a little bit for me today, but I'm still underwater on that. And with IPOs, again, you can be patient. And these are all for me, again, as a reminder, if you're a new listener, these are all very small. I own a lot of stocks. So, these are all 1% or less positions right now that I'm
Todd,
talking about.
how many stocks do you own these days approximately? Is it
Uh,
still over 100?
yeah.
Yeah.
100 and, well, it's 128. I know, stupid amount. And then I cut back a bunch. And then I've started again on the weakness this week. I started to pick up some stuff on sale.